Our next session meets together two icons of the investment industry in a discussion on trends and opportunities shaping the entrepreneurial landscape. My special guests here are Dr. Hendrik Brandis, co-founder and partner at Earlybird Ventures. If not one of the biggest, then definitely one of the most successful European VC companies with, if I'm not mistaken, over 2 billion under management and with I think 4 or more IPOs. Hendrik, please correct me if I'm wrong, and over 30 exits. And Mr. Jen Tsuchikawa, who is the CEO at the Sony Ventures Corporation. Obviously, the name itself speaks enough. So I would love to hear more from them during the next 40 minutes. I have jumped here in the role of moderator because our moderator is particularly, unfortunately, sick today. But it is my utmost pleasure to be the host of this discussion and to welcome you both. So how are you? Thanks for joining.
Thank you very much for inviting us, Plamen. Very well. And Jen, over to you.
Yes, sorry. Yes. It's 9 p.m. Tokyo time. Nice chatting.
Thank you so much for being with us that late, and I will definitely make sure that we will go in time so you can then be back with your wonderful family. Thanks again, both of you, for joining us. I will start with our questions, and there are a lot. And with your impressive history in venture capital industry and with boosting and growing innovations around the world, can you share with our audience what first got you into investing? What have been the most memorable challenges and impactful moments you've encountered during your careers? That's a warm-up question. So maybe we start with Hendrik, and then I would request also an answer from Jen. Hendrik?
Yeah, I'm an aerospace engineer by training. Spent my first life in technology and developing aircrafts. I did that for 3 years before I actually, by chance, joined McKinsey & Company to learn something about management. And within McKinsey, I was always enthusiastic about serving small and mid-sized companies, which is actually not the typical clientele of McKinsey. But I got engaged with the mid-sized company initiatives and then with McKinsey New Venture back in the 90s. And that brought me actually in touch with an initiative McKinsey supported back then, which was the Munich and Berlin business plan competitions. It was a concept stolen from the MIT in order to foster entrepreneurial activity here in our region. I liked it so much, and I was so fascinated and impressed by the multitude of energy and great tech ideas, and on the other hand side, the shortage of professional funding, that it actually triggered my desire to leave McKinsey and co-found Earlybird as a new venture firm, and that was in '97, so quite some time ago. The other question you were asking is what have been the most impactful moments throughout my career, and I must say it was, I think, the most impressive and impeccable moment was probably shortly after we got started, because as I said, we started in '97, and then we directly ran into the first burst of the burst of the first internet bubble back in 2000, and we entered into what I describe as a nuclear winter of venture capital back then. And I very well remember how difficult it was. There were absolutely no external funding available for our portfolio companies. We back then decided to actually invest our management fee into the portfolio in order to keep it as much alive as possible. And we still had to do a triage in the portfolio companies, and very early on decide which are the ones we'd like to back, which are the ones which probably won't make it, and the middle cases where we still have to decide on. And that was extremely painful experience, very, very early in my venture capital career, but I must say it was also very educational, and I still benefit from this painful experience, knowing that the sentiment can turn quickly, and the tide goes into the other direction, from capital overflow to extreme scarcity. And it has probably some reference to the moment we're currently in, but we may come to that at a later point.
Indeed, yes, and I'm glad that you make this reference, because we definitely will talk about it. I think that's most probably the information that everyone wants to hear from us during this call. But I would like to request here some thoughts from Jen, and some of that initial feedback and information to set the stage for this discussion.
So the question is how I got into investing, but so I went to Stanford for my business school, and so half of my classmates went into startups or VCs. So this was something I had known very early on in my career. But I personally had spent most of my life after that in the bigger finance and mergers and acquisitions, whatnot. And when I was asked to form the Sony CVC team now 7 years ago, I frankly did not fully get it at the beginning. But once I started talking to many of the startups, it immediately took me on and really told me that this was the fundamental source that was going to move the world. And I was, at the time when Hendrik was talking about, I was an investment banker. And so we went from a time when everybody was only talking PSR to a period where no one talked about PSR. And so it was a pretty drastic time. And obviously that really is something that comes to my memory when I look at the current market situation.
And the current market situation is the following. NASDAQ losing 30%, capital markets going down, and we all know that VC money follows the trends of the capital markets. That's of course definite. And we see this fast pacing in changing world, unstable markets, and then we have wars. I mean, we all talk about one war. There are so many different, unfortunately, wars, but that particular in Europe. And the effects of the corona pandemic are all factors that influence life and, of course, business at all different levels. So how do you think the current geopolitical situation and current market state of the VC landscape, where is it heading? And of course, from that point of view, do you see any major contrast and specific advantages in entrepreneurial ecosystems in regards to their geographical and belonging to a particular region in the world, whether it's European, Asian, African, US markets? And maybe Hendrik, just to follow the order, start with you first.
So, I mean, I think it's pretty evident. We will be seeing, or we are currently seeing, a slowdown in the venture industry. And as a regular comment, you have the Tsuchikawa letter going around and focusing everybody and his dog on preserving cash. Obviously, in these days, it does make sense, since the acquisition of new funding will unavoidably get tougher. It has some logical implications. So being more cautious with respect to spending, more forward thinking with respect to fundraising, being more focused as an investor on internal portfolio, less relying on external fundings coming in, etc. That all makes a lot of sense. However, I'm not one of the VCs who say we're entering into a next black phase in a catastrophe, total disaster, whatever. I'd like to remind ourselves that also the venture industry is a cyclical industry. It has always been a cyclical industry. I remember maybe 15 or 20 years ago when I first met Tim Draper, who you know pretty well. He told me the venture industry is through cycles, and these cycles are 7 years long. They may not be always 7 years long, so the last cycle was slightly longer. As a matter of fact, there are cycles, and the down cycle belongs to our industry as the beyond times and the upswing. So it is, to some extent, it's also part of doing business as usual. We have to set different priorities these days. We have to be cautious without any doubts, but it's not the end of the world. After the downturn, there will be an upswing again. We just may have to make sure that we will weather this more tough period and will still be alive for most of our portfolio and for us as investors when it goes up again. And it will come. It's absolutely sure. So this is a little bit my message. Yes, let's be cautious. No disaster coming. It's just normal down cycle, which belongs to our business at the other side. To your question with respect to how different regions might be impacted by these market cycles, I personally think the more mature an eco or venture or a startup ecosystem has yet been, the less it is impacted. So if it is a very volatile and sensitive young ecosystem, think about a VC who is managing his first fund, and then in the first fund generation directly goes into a down cycle, and possibly the performance of this first fund ends up to be inferior. It will be extremely tough to recover from that and raise a second or third generation. If you've been around, I mean, we just closed our 7th generation, and you had a series of very well-performing funds, and then you have one in a difficult economical situation, which is probably a little bit underperforming. I'm not saying that it's the case, but even if that would be the case, you can argue and you can get over it. It's much easier. So I say the more developed a certain ecosystem is, the less it will be impacted by the current downturn, and people will see it as a normal cycle of a business system which goes which is a little bit cyclical. So Africa might be more impacted than the US, to put it to the extreme, and Europe might be somewhere in between.
Thank you so much. Thank you so much, Hendrik. Jen, of course, I would love to hear your thoughts on that particular question. And mentioning US, obviously, you are aware the markets were, I would say, overheated. Do you think that this cooling down is more like a healthy mechanism for the markets?
So, well, you could say healthy and not healthy. I think there's discussions on both sides, but I think I've sort of, maybe come to the conclusion, talking to many different people, really checking the vibes on the market. But at the end of the day, innovation is the largest driving force of our society. And I think that will continuously be true. And where we are investing is where that really comes together. So I think we continue to be in the right place, and we will continue investing. That's where I've ended up after spending so much time analyzing and talking with many people on this issue. We invest. I have teams in US, Europe, Israel, and India. And obviously there are some regional differences, but we're seeing the similar impacts everywhere. Even in some of the emerging economies, I think we see some good growth in companies, for instance, in India, certain sectors because of the increase in the betterment of the telecommunications technologies, and some very strong startups coming up and growing. So we will continue to invest in this environment.
There is, I would say, a sub-question here, because I'm sure everyone wants to hear it, and obviously we're not oracles here, but still, maybe you both know that until December last year, our Founders Games, which goes for the past 12 years, has been attracting over 3,000 companies every year for the Startup Challenge, which some people call it one of the biggest in the world. And our award was 1 million. Counter crisis, or let's say counter the overall feeling about the markets, we give increased 6 times our award. Now we give 6 million, and the amount, but also particularly the quality of the companies that we attracted and that we are currently under scoring of third round out of 5 is phenomenal. And you have mentioned, Jen, that India particularly, but some other regions also, Eastern Europe, are, I would say, on the verge of something. And I would love to hear from you both. What are the rising stars and the most resilient tendencies that you have come across in your work with entrepreneurs? And particularly now, where do you see the growth in the next, I would say this was about to be my actually sub-question. How long do you see this downfall, or whatever it's called, will last? So how do you plan your portfolio and the investments based on this timing? Many people say 2-3 years, but is it so? What do you think, Hendrik?
Well, first of all, I'd like to state that I do very much believe in the ever accelerating value generation through technological innovation. I do not see any slowdown driven by a potential recession or slowdown or more innovation, whatever. The creativity of brilliant minds will not come to a stop. It's basically independent. It is very, very resilient. Just think about it. Back in the 80s and the 90s, we've seen what we call pretty much one platform technology per decade. So platform technology, I call a new technology which is serving as a platform for many, many, many startup concepts. 80s was the PC, the 90s was the internet, which has created huge companies. Yeah, the PC basis for Microsoft, the internet for Amazon and the like. So, but one platform technology per decade. If we now do a fast forward and talk about the current decade, I would probably state that we're seeing 5 new platform technologies, each of them as big as the innovation of a PC, of an internet. So I can talk about SaaS or cloud computing. I can talk about blockchain, yeah, and probably as big as the internet. I can talk about AI or AGI, enormous potential coming up. I can talk about new space, yeah, coming down from the higher orbit to the lower orbit, opening up in huge array of new applications. And I've not even touched on the life sciences yet. So I'm just saying the density of technological innovation has so much accelerated that there's an enormous potential. Yes, it might be that the capital markets appreciation in terms of valuation and liquidity for these innovations might be not as big as it used to be for, I don't know, 2-3 years. It can even bounce back much quicker if it turns out that the lockdown in China will be soon lifted, and they get over the pandemic in a better way. So supply chain challenges will fade away, and we see innovation on the back end of that coming down. So it can actually bounce back quickly. It can also last for 3 years. I have no crystal ball. I cannot tell you. And at the end, and in the big scheme of things, it doesn't really matter. It will come back, and the underlying intrinsic value generation is just continuously moving on. And the question, at what point of time we get the appreciation of capital markets 3 years later, 3 years earlier, doesn't really matter. It doesn't even impact so much our performances. Because if we exit 2 years later, we exit a much bigger thing. And in some stage, there will be the appreciation in the liquidity back. I'm absolutely sure. Second part of your question was, first, actually, I answered the second part first. And the first part was, what have been, what are the characteristic of the most impeccable innovation? And I would like to state there, basically, in my eyes, there are three main things which always apply. So first of all, real impeccable innovations, always based on big visions, for big markets, big problems of mankind. We're not talking about niches, we're talking about mainstream problems in mainstream markets. They are driven, secondly, by distinct, brilliant, impressive leaders, our famous entrepreneurs who actually make the difference. And they come up at a period when their time has come. So, sometimes innovations or ideas come up too early, and the market and are not ready. Then it is an issue. But big companies, big innovations, which really make a difference, come up at the right point of time. And these are the three considerations I would always look at if I think about what really make a difference, what changes the world.
Thank you so much, Hendrik. Yes, this reminds me this fun story, but true story of late 80s when our parents, or let's say it was a common thing to be warned never to get on a car with someone you don't know. And imagine how Uber would have been happening during this time. There was no way. It was the cultural difference that would never allow. Forget about technology itself, right? Now it's completely different. Now we cannot even, young men cannot even consider not doing the riding of a car in a shared way. So, and Jen, what would be your take on our current topic?
Well, I totally agree with Hendrik's view that the world has really expanded, and I think we benefit from the fact that Sony is also a very diversified company, and that we pull in resources from all over the company to really help us analyze the situation. And in this environment, many people also talk about adapting or pivoting. And of course, there are companies that need to do so. But I think we've also seen some companies who have always had a consistent, constant vision and really been marching forward. Naming some European companies, let's say some of our investments like Scandit, the smart data capture company, or an Israeli company we invested called Trax Retail, the real-time shelf data company. They've really been consistent and marching forward, and really been growing in a pace that is very meaningful. One of our other favorites is a U.S. company, a company called Agility Robotics, the two-legged robot company, which has gotten a pretty significant financing quite recently. And they have a very significant potential in logistics.
I would, listening to you, I'm really thinking that the fact that there are so many startups that are watching us today and in the coming days, as part of Webit being hosting a number of select startups from over 3,200 this year, being selected for the annual Founders Games, for the first season actually of the Founders Games this year, the startup challenge that we've already mentioned, and definitely honored to have Hendrik on board. And Jen, I'm not going to put peer pressure here on you, but it will be great to join us as part of the collective intelligence, selecting the best of the best in the world. But here, my question would be more connected to what you, Jen, said, and that's why my question will be for you to start with. What's your advice to the entrepreneurs who are, they're wanting to build successful and resilient business? What is the first thing that catches your attention in a startup pitch, and what are the things that you ask yourself when assessing a potential investment?
Well, Plamen, I'm going to reverse the question a little bit and try to answer it a little bit differently. So I would advise the startups to look for investors who are genuinely interested in what the company is doing. I think they can tell, investors who are partially interested or investors who are really interested in what they are doing and want to go very deep in terms of what the company is doing. And I think it's those investors that will really bring benefit to the startup at the end of the day. And I think that's what the startup should look for. Maybe a too short a question, but Hendrik, I'm sure, has a very nice view on this.
Yeah, my advice is to companies always, there's one, there are a lot of things which are decisive for success, but there's one which is really central. And if I would only be able to focus on one, and then it would be the team. People make the difference. And it's a nice message as well, I think, because first of all, it is what founders definitely have in their own hands. They can assemble the team they like. And it is also nice that at the end of the day, it is a level playing field for everybody. Yeah? And whoever is capable can make it. So for me, the assembly of the right team is absolutely key. It sounds trivial, but it's not, because people might just go and team up with their classmate, roommate, friend, whatever, in order to launch their startup. And it might be the easiest thing to do, but it might not be the best thing to do. I would always give the advice to be mindful about with whom you team up with. It doesn't need to be, or maybe shouldn't even not to be your best friend, but the person you team up with should be complementary, different skills. You collectively have to have all the capabilities a young company needs. Ask yourself, ask others whether they think it is the case, listen to others, and never stop to reassemble the team if you think you might not have the very, very best people at the start. Think about Google, Sergey Brin, who has handed over to Eric Schmidt in an early phase. And it was probably the prerequisite getting this experienced man as turned CEO to make Google a world globally leading company. So it is a never-ending process. Second advice I would give is, I think it is extremely important to stay focused. And it is very difficult to stay focused in a startup, because you have so many opportunities, and the more opportunities are staying and they're coming in every day. And it is, you have to say no and say, so what really matters? So one advice, very practical, I would give is be bifocal. What I mean with it is be always aware, what is your North Star? What is your vision? What problem do you want to solve, and how, and what is the end game you're looking for? And that guides you through a lot of decisions, because you should always ask yourself whether the certain decision brings you closer to your end game or not. And if not, you should reconsider. And the other thing of the bifocality is to think about, what do I need to do Monday morning? That's the only thing what you can do. You can't do what you need to do on Tuesday. You can only do what you need to do on Monday if it is Sunday. So don't bother what you're going to do Tuesday. Don't think about what you're going to do midterm. Think about what's the end game. Is what you're doing on Monday morning bringing you closer to your end game, and ignore everything else in between, and reduce complexity through this strategy. I made very good experiences with teams who have pursued that strategy. I think it's a good one.
Thank you so much, both of you. And thanks for getting deeper, as Jen suggested, into getting this knowledge of where and what startups should go. I have obviously there are these percentages of failure rate and death rate, and that's why this industry is called a venture industry, and it's associated with high risk. But we have starting with 95% death rate at the very beginning of the life cycle of a startup, up to 60 to 70% overall during the years, looking from different portfolios of VCs around the world. Do you think that there is a need, something to be done to improve this mortality rate? And is there something that VC world can do better, improving the livability of founders? Because we've already discussed the things that every founder should be aware about, but still, can we somehow support the innovations which we need so much these days, particularly in building a more desirable and sustainable future, which not always comes with huge multiples, even though I'm a firm believer that it does, but still, what can be done? Maybe to start now with Jen again.
Sure. So I think total performance of the portfolio is at utmost important, and really focusing more capital around the companies that will scale at a pretty significant speed is probably the most important factor in this industry. And of course, I mean, and so, failure rate, is that the right point to look at? That is, I think that is a discussion. It just happens that we have a very low failure rate on our portfolio. We've invested in roughly 130 companies, and the failure rate is less than 10. So it just happens to be that we spent more time looking at doing the due diligence, and that may be the result of that. But so if the company, I think as Hendrik had mentioned, if the companies are on their vision and on the right track, they should just continue to proceed. But if they feel that they've deviated or there's something missing, if they have very valuable engineers and variable management people, then moving off to the next ship may be the right thing to do. And this is all market mechanisms, so I'm not watching it day by day. I mean, we're watching startups day by day, but that's also a very healthy phenomenon in general, I think.
Thank you so much, and Hendrik.
Yeah, I mean, I try to take a little look from a different perspective and say, what can we do as VCs to help startups to survive, to perform better than they would perform without us? So along the lines what I said beforehand, I think most decisive is actually helping the team to grow, to hire complementary skills at the right point of time. I'm always a big fan of, in a startup, is actually, if the business is good and the market is good and the vision is good, the success is actually determined by leadership and liquidity. So if I have liquidity and if I have leadership, they're going to make it. So, but I start consciously with the leadership, because this is a more difficult thing to do, because we can provide liquidity and we have it more in our hands. But the leadership is something we need to support the startup with, and to get really the best leaders to the front line and teaming up with the very best people and managing their concept, their business. And I think we as an industry can get much better than what we're currently doing now. Obviously, we all try to be helpful. We have our network to certain HR consultants. We may even have an internal HR consultant and helping there. But this is all a little bit, I must say, it's concepts of the 90s. And that can become much more sophisticated, much more professional. We can apply AI systems in order to identify automatically at no cost potential fits in LinkedIn, helping companies to funnel in candidates. So I truly believe there's a long way to go, and we really working hard to get there, but it's not easy. Yeah, otherwise everybody would have done it. But I think becoming more supportive, more impeccable with as a partner of our portfolio companies, enabling them to building the best possible teams. I think there's a lot what we can do more than we're currently doing. Second thing is, as I said, it's leadership and liquidity is the provision of liquidity. Yeah, and I think it is almost our responsibility to improve our ability to provide long-term liquidity. You know, the venture industry is still, to a large extent, not everywhere, and to the least extent in the US, but in other parts of the world, more are structured in phases. You have, you know, the seed funds, the early stage funds, and the late stage fund, or the growth funds, and that contains a lot of risk, because in every step, when you go from C to A and from A to B, etc., you typically are in search of a new lead, and you have to convince an external investor. They may or may not buy in. You may or may not you can't talk to the universe of investors. You may or may not talk to the right investor. It might be an adverse market condition. As we enter one now, it will become more difficult. Always induces additional risks, even though if the underlying business might be healthy and good. In a situation where we as investors have sufficient funds and liquidity under our own belt, we are yet convinced that the company is performing well, and we can just continue to lead rounds over various stages. It definitely takes out risks. So I think it is our responsibility. It is, and it should be our strategy to become bigger and more cross-stage investors in order to take out risks, not to, you know, to reduce the necessity to cross the bridge after every round or every stage. I think that is where we can become much better. What I see, what is usually done already pretty well, is functioning as a true non-executive team member, a founding team member, being a sounding board to the entrepreneurs, helping them with the experiences we made through, Jen was talking about 130 investments. We have done 200 investments. We have seen a lot of things which went well and which went not so well. And we can obviously share these experiences, and being an advisor and consultant, sounding board of our entrepreneurs. I think there what I typically observe with the professional firms, the industry is not bad. We can always get better there, though, but I'm not so much dissatisfied. But in the first two dimensions, which probably are even more decisive, we can still get much better.
Thank you so much, both of you. What a phenomenal discussion. And I wish we can go on and on. But again, I've already promised Jen that I should not take him away from his family at 9 p.m. Now it's already 9:30, now 9:40 p.m. Tokyo time. The same with you, Hendrik. But I cannot spare this, but to say that Hendrik, it resonates so much with the Webit philosophy and our mission to prove the world that definitely it's not a zero-sum game, and that definitely Keynes is no longer right about the scarcity of resources, even though we see what's put in game now with the scarcity of resources. But I'm sure we're going to find the solution pretty soon, and sooner than everyone thinks, because what technology is really doing and what we invest our lives and money of our investors there furthermore is the abundance of opportunities that we built for a better, more desirable and more sustainable world. And you were mentioning numbers, obviously, Jen with 130 and you with 200 out of as I've already mentioned, you have already 4 IPOs and 3 dozens of exits, definitely successful. What I would like to share with you is that for 12 years of Founders Games, there are 0 defaults in the finalists of the final round of Founders Games, because we are using the collective intelligence of several hundred investors every year, scoring some of the top companies around the world. And here we go about not competition, but actually collaboration. Many of those investors become, they syndicate around, and we support those phenomenal founders grow bigger. Of course, we support them with our network with media, we support them with our corporate partners, we support them with our knowledge and know-how of global markets. But above all, I think the key is collaborate and support what you both mentioned. And that's where I think, and talking about liquidity and money, we're doing now a small test, I would say. We're listing an IPO, funding an award for Founders Games. And there's been phenomenal interest, over 6 million, growing to 10 million now, allowing people buying shares to jump into this new exciting world for them. You know, venture world, we are very lucky, and you particularly, venture world is closed for majority, and it's only for 0.0001% of the humankind being able to support innovation and to grow it into the future sustainable world. I imagine a world where thousands of people will have a skin in the game, investing in sustainable companies and sustainable founders, and starting more resilient and more I would say responsible lifestyle. So again, I'm not sure if you share this vision of mine and if it makes sense for you at all, but it's a test. And I hope this test will be successful, because we'll be having thousands of people on our side, taking some risks on the way, definitely, but supporting great innovations for this beautiful new world of abundance of opportunities. So what's going to be your take on that, both of you? Very briefly, before we say bye to our audience.
Well, then, if I may go first, I mean, I think it's, you have a great goal and a great task to work on, and I think it's something that you know, everyone from the society to the corporation to the individual needs to work on. Sony has a very strong commitment to ESG and SDG. And we have, in terms of our investments, we have a program to really work with every investment we have to work through the ESG goals for each of the companies and try to help them really advance in their goals. And so I'm excited to be continue to be a part of this program, and look forward to a successful conference.
Thank you so much, Jen. And Hendrik?
Yeah, I mean, I fully support what Jen has said. What I'd like to mention is that a true believer that the world can only be rescued by technology. It might be that technology has brought us here and there into challenges, but there's no point to discuss it anymore because we are there. We are faced with global warming, no doubt about it. The only way out is forward. We can't go backwards. We have to find the breakthrough innovations in order to find to fight global warming and other major challenges we are currently facing. And I'm a systematic optimist, because otherwise I think one cannot be a venture capitalist. I'm absolutely sure we will be finding those, and there are fantastic opportunities. They're actually closer than they may appear, like in the mirror in the car. And sometimes they're actually closer than they appear, and that's the way to escape from a couple of miseries we currently observe in the world.
Thank you so much to both of you for your time. Thank you so much for sharing knowledge and experience with all these thousands of people with us at Webit and our global community. I look forward to have the honor and pleasure to have you back with us at our next events, and definitely, Hendrik, to be with you at the finals, selecting the best of the best in the world. Thank you all. Thank you.
Thank you.